Hello guys, daily update on Bitcoin. So in this trading chart, I have the Bitcoin to USD daily charts, and it's on the Bitfinex exchange. And as you can see, we're still in the process of completing the Wyckoff accumulation phases, and we are namely in the phase C parts. So if we zoom into this trading chart and into the one hourly time frame, we can see that there's a very fundamental pattern that is forming here, and it's a pattern that every trader who initially come into the trading world would definitely know of, which is the head and shoulders pattern. And this one is an inverted head and shoulders. And you can see that in the past few weeks, we have finished the left and the head of this pattern. And we are currently in the process of finishing up the right shoulder. So this is a very bullish pattern. The price action during this phase may actually go a bit lower, up down to the 6,000 level. But I think that given that this is a key level, it should not breach this level. And the reason why I say this is a key level is because I extrapolated a Fibonacci retracement over here. So I assumed that this is the first wave, and then we are currently in the second wave. So if I just pull out the Elliott wave tool, so I assume that this is the first wave, and we are currently in the second wave. And it's very common for the second wave to retrace back to the 0.618 Fibonacci target. But more often than not, it sometimes breaches this level um, momentarily and go on to the golden pocket, which is the 0.65. And we can see it sort of went into this price action sort of textbook and sort of breached the golden pocket momentarily, and then the market makers pushed it back up. So I do not expect this to breach this 6,100 level. And there's also a bullish divergence that's forming right over here. So as you can see on this RSI, so bullish divergence is where the RSI value is low, but during after the low is established, the proceeding price action of the well, not price action, the value of the RSI would not go to the previous low, but the price action would be lower. So we would call this a bullish divergence. And so that basically means that the price would go back up. So we have sort of three bullish indicators: the head and shoulders, the Fibonacci an Elliott wave target over here in the 0.65, 0.618, and also the bullish divergence, and also Wyckoff accumulation theory. So really four bullish indicators. But of course, we could go back down. If we are really going back down, then I would sort of set the stop loss. I mean, if you're actually going into a long trade over here, I would step a stop loss at 5,750. Um, you could ladder into a long position over here at the 0.618, 0.65, at the 0.786, and at the 0.887. Any level below that sort of becomes very risky. So I would simply set three targets over here, and over here. And then I would set all three stop losses at the 5,750. If we breach 7,750, then it's most likely that we will go down to, say, 5,200 or 4,800. And if we breach 4,800, then 3,000. If it's lower than 3,000, well, it's going to be um, quite difficult for Bitcoin to go back up. But I honestly do not think Bitcoin would go lower than 3,000. In fact, I think 4,800 would really be the bottom if it really goes down to that low. Uh, but I mean, if we just stay with what's going on with the market right now, I would say that it's definitely a good trade to go into a position right now and then ladder in case it goes back down a bit. And then, but of course, we definitely need to manage our risk. So a stop loss at 5,750. So that would be my recommendation in the trade. Well, not financial advice. This is just purely education purposes. So in terms of this education video, I would say that these three levels would be a good buy-in level, and 5,750 would be a good stop loss level. So that's the Bitcoin update. And if anyone's interested in the traditional markets, uh, the markets are actually going back up. It's not 9:30 in the U.S., but we can see from the futures market that the Nasdaq is rising back up again, and they are buying bonds again. So for those who do not understand what the relationship between the bond and the stock market is that the U.S. government they would buy the U.S. Treasury bonds, and every time they buy the U.S. Treasury bonds, they have excess cash that they can use, and we can see um, a lot of good traders, they also see that there's a relationship where whenever the bond market goes up, the stock market also goes up, which means that it's very likely that the U.S. government they are buying bonds from the U.S. Treasury market, and then they're pumping this excess cash into the stock market, which is why whenever the bond market goes up, it's very likely that the stock market will also go up. And I don't think this would end this rise in the stock market. I think that it would end when the Trump midterm elections and finish in November, around November, December, and that will also be when the yield curve inverts, and the yield curve mainly the 10-year to 30-year yield curve. But I could do another more detailed video on the traditional markets. But the reason why I bring this up is because the traditional markets would be a good indicator for where Bitcoin is going in the next few months. Because when the stock market goes down, it's very likely that the money will go into commodities, say gold, silver, and even Bitcoin, because these are very hard assets. And if there really is an upcoming recession, then it may very well be that the commodity market would see a bull run, bull run. So yeah, this is just a quick update on Bitcoin and some information on the traditional markets.